Howdy there, folks. Welcome into a little late night video here. But almost midnight. We're looking at about 11:53 p.m. Late night talk with Jeremy about what if there's a stock market crash in 2022, and what am I going to do in that sort of scenario? I hope you guys enjoy a little late night video, a little chat like this, just kind of low key. Chilling out and just kind of thinking about this and kind of what I'm going to do. All I ask is, the drill. So, anywho, we'll think about it for a moment. Let's imagine there's a scenario where there's a stock market crash in 2022. So, how would there be a stock market crash? Well, inflation gets so high that, it really starts... you can make an argument that's already starting to really hurt people's pocketbooks, right? In terms of like everything getting so much more expensive, gas is getting really expensive and just everything in general, right? And so people don't have as much money to spend. Let's say wages continue to increase, companies just can't hire, and then people can't really spend money because they're having to spend so much money on like basic, necessities and whatnot, right? And so you get into this cycle where all of a sudden, layoffs start happening, and you go from, an ultra hiring cycle to kind of this firing cycle. And you get into this kind of environment where you're all of a sudden like, holy smokes, we're actually going toward a recession, right? It's not impossible to imagine. I wouldn't call it the highest probability, that's for certain, but it's a possibility. And so that's a scenario we must, just say it's possible, right? So let's assume it happens, right? So first thing I think about is I always think about in the stock market, I think about risk reward, right? Everything in this game is risk reward. So first thing I think about is where is my money concentrated? Well, my money is really concentrated in three core stocks. Those stocks are Tesla, Walgreens, and Tattooed Chef, TTCF. Two of those stocks are high growth stocks, right? One of those stocks is a value stock. One of those stocks is a food company. One of those stocks is an EV company, plus a lot more, right, in Tesla's case. But right now, they're an EV company. Let's be quite, clear. That's where they make their money, right? And one of those companies is a pharmacy chain. So in a recessionary scenario, in a stock market crash, I think obviously Walgreens is the one that would get hit the least by far, right? It's a needs-based play, and at the end of the day, regardless if the stock market's crashing or regardless if you're in a recessionary environment, people still need prescriptions, right? People still need the base necessities that Walgreens sells, and so Walgreens' business model would be by far and away the least hurt, right? Tesla obviously would be, hurt quite a bit in a scenario like that. I mean, if all of a sudden people are in a bad financial position, they're going to put off purchasing cars in a scenario like that, right? Which would obviously hurt Tesla's backlogs in a scenario like that. And then if you compound that with, let's say, it was harder to get loans because all of a sudden people were losing jobs. Obviously that's not the best situation. The one good thing Tesla has going for them is the majority of people that still order Teslas, generally speaking, have really good jobs or have quite a bit of money behind them, right? So that's the one good thing for Tesla. There will be a day when Tesla does not have that customer base and just, everybody is Tesla's customer, right? But it's not today, okay? But at the end of the day, absolutely Tesla would be affected. We can't deny that, right? Those growth rates would come way down in a scenario like that. You look at a company like Tattooed Chef, it's a food company, right? But it's a high growth company. So, how does that impact food trends and things like that? Yeah, if all of a sudden people are looking for the cheapest way to do everything, all of a sudden maybe people are looking for the cheapest way to eat, right? And the cheapest way to eat is not eating Tattooed Chef and not eating plant-based products. The cheapest way is, buying whatever's the cheapest thing. Like, back in the day, my diet back in the day as, a youngin', when I moved down to my parents' house and stuff, like, my wife can tell you this, I used to eat, get Van Camp's beans. Van Camp beans were like under $1 per can at Walmart, and just heat those up in the microwave and just eat that as a meal. Not the healthiest thing, right? Totino's pizzas, man. Back in the day, I doubt they're still under $1, but back in the day, Totino's pizzas were under $1, right? Because I was just on my grind and I was just trying to save as much as possible, right? And if people are tight on money, obviously, food cost is absolutely an important thing, right? So they would even be affected at some point in time. The good news is they're a food company, so food's a necessity, and there's certain people that just principally won't cut that out of their diet, right? So there's that, right? But that's my three core positions, right? That's the big dogs that are really driving my portfolio, right? And so I don't feel terrible about being in those sorts of stocks, because although, yes, they would be negatively affected, they wouldn't be negatively affected, I think, nearly as much as a lot of other companies, especially in Walgreens' case, right? Then Walgreens, let's bring that one up, right? If that one's the least affected of the bunch, that stock price is relatively stable, right? It would likely get hit with all stocks, right? The good news I have going for me is I could go ahead, sell out of that position, and likely still take a gain on it, right? Plus the dividends I had received in that position, and then go in and funnel that money into a lot of the beaten down stocks that are, super beaten down. Let's say one of those scenarios plays out, and Tesla gets cut in half, okay? And then I could pick up Tesla for half its price, right? Let's say Tattooed Chef stock is all of a sudden a $10 stock or something, or $12 stock because the growth rates came way down. Then I could pick up that stock, right? Let's say all these other stocks are just hammered left and right. Then I could go ahead and use that money to go ahead and essentially, buy other stocks that are really beaten down in a scenario like that. So, that's the way I kind of think about it. Now, Corsair Gaming, that's a really large position for me. It's not as big as Tesla. It's not as big as Walgreens. It's not as big as Tattooed Chef, right? But Corsair Gaming absolutely is a big position for me. That matters. The good news I have for Corsair Gaming is that stock's already come down significantly. And, at the end of the day, I think there would be some sort of pullback in that market, but I don't think it would be nearly as dramatic as a lot of folks would assume. Let's just put it that way, okay? So if I think about it from, if there's a stock market crash, like what are my plays there? I have, definitely plays ready, right? In terms of Walgreens potentially cashing that and putting that money into other places. I almost look at Walgreens stock as kind of for me, it's a better version of a savings account, right? It's not guaranteed the same way a savings account would be, but at the end of the day, Walgreens is, I feel like, an extremely safe play, plus a turnaround play, plus a great dividend stock that pays me out. I think it's 5 figures every 3 months, right? And so I just kind of look at that stock as my piggy bank that, if things really turn south, boom, I could sell out of that one and go ahead and funnel that money into other stocks that are probably going to be beaten down way more than that, right? Now, once again, that's assuming there's a stock market crash, right? Now, the wild card there is, kind of viewing it as if we were in that type of scenario, how long would I think it would last, those sorts of things. And that would dictate whether I get into any call option plays, right? Because if you're in a stock market crash, you have to consider some things. One is, do you want to buy puts, right? So the hard thing about a stock market crash is you don't know how long it's going to go for, right? You don't know how long it will last. And so from a put option standpoint, it gets really difficult to buy puts in a scenario like that. You might say, well, it's just easy, just buy puts. Well, the problem is you don't know how fast things will flip the other way, right? And we saw that play out in the Rona crash, right? The Rona crash, where, if people got positioned, in January and February because they were hearing some things, and we have we have one person in the private group that made literally millions of dollars by this strategy, essentially. It's crazy. But they did business in China, and they heard about Rona before a lot of people heard about Rona, and they thought it was going to be really serious, and they bought puts left and right on a ton of stocks in the market, and they made a fortune. And then they flipped it right around in the middle to the back half of March, and they bought calls, and they did one of the sickest things I've ever seen in the stock market in terms of the amount of wealth they gained in such a short amount of time. But needless to say, it's for most people, it doesn't work out like that, right? It can be very, very confusing. It can be very conflicting on how long it will last, right? It's is this stock market crash, correction, whatever you're in, is it something that's going to last a few months? Is it something that's going to last 6 months? Is it something that's going to last 1 year, 2 years, things like that? And so that would be the hard part for me, is trying to figure out, do I want to buy calls? Because if all of a sudden a bunch of stocks are down 30, 40, 50%, then it gets into this situation of am I better off buying long-term out calls that maybe expire in 2 years? If the market bounces back huge, those calls, are printing money, right? On the flip side, it's like, man, what if we're really in this for a more substantial amount of time? And that's the thing, it's really hard to know, like, how fast it will happen, right? I think the market went down way faster than anybody expected when, the Rona crash happened. And I think the market came back way faster than really anybody expected in the Rona crash, right? And so you look at that scenario and it's like, man, things got a lot worse, a lot faster than anybody expected, and things got a lot better, right? And so that would be a hard thing to kind of figure out. And if we had some sort of stock market crash in 22, is like, and then another component that I have to figure out is if I wanted to go on margin, and if so, how heavy would I go on margin, right? And would brokerages keep the margin rates the same? So right now I have Fidelity at a 1.55% margin rate, right? What if, there's a stock market crash? Would Fidelity keep that? Or would other brokerages keep that, right? And then you all of a sudden wind up in a situation, if things got really bad, that you end up in margin calls, right? So there's that component. It's like, oh man, things could get ugly pretty fast. And so these are all things I have to consider, where I'm like, a lot of it you don't know unless you're in it, and kind of how you react and what level of risk you're willing to take. From me and knowing my perspective, if I'm in that sort of situation, I'm probably going to play it a little safer, right? I'll probably play it a little safer rather than aggressive, because of that, you don't know when things will end. So I would love to say, oh man, I'll be margining, I'll be buying calls left and right. No, I would be playing it a little safer. That's just kind of the way I am, especially, I'm just that way in general. Like, you look at a lot of my stocks I like to buy, it's stocks that are already beaten down. I don't buy a lot of high flyers, right? I buy a lot of companies that are, what I would call, if you're looking at the realm of risk, a lot of my stocks are not the riskiest. I mean, Tesla is such a big position because it went up so much, right? Walgreens is I feel like one of the safer plays you can possibly be in the stock market. I don't know if it's the safest, but if we're on the spectrum of the riskiest and the safest, Walgreens is certainly much closer to this side than 95% plus of stocks, right? I own a significant position in a food company. Corsair Gaming is obviously a gaming and streaming company. That's a level of risk there, but that stock's come down so much, the valuations come down so much, right? Honest is a stock I'm interested in buying a lot more shares of. They make diapers and wipes and beauty products and like makeup products and soaps and shampoos and stuff like that for the kids. So I mean, and babies and they're in some other product categories as well. So if I think about the levels of risk I take, I don't think it's the biggest. Planet 13 is one that I think about as like maybe a little bit on the riskier spectrum. If we were to be in a stock market crash or a recession, right? Vegas, I'm sure Vegas traffic would be hit in a scenario like that, and the Planet's main location is in Vegas, and so that would be hit, right? At the end of the day, the Planet does sell somewhat need-based items, I mean, for a lot of folks, right? But they're more pricey, and so if folks are price sensitive, they might go somewhere else, right? And if Vegas traffic is down, that hurts the Planet in a big way, because their main store is here in Vegas, right? If I think about Wynn Resorts, which is a stock I have a position in, yeah, I mean, absolutely. Once again, if Vegas traffic's down, that would hurt them. The interesting thing about about Wynn Resorts is, even if you had a stock market crash or some sort of recession scenario in 2022, is when it comes to Wynn, Macau is likely going to open up big time in 2022, so they would have a benefit there, but then they'd have so that's that's a really confusing stock on how that would all play out, right? And, so yeah, that's a lot of the bigger positions I have. So I like the way I'm positioned. If we were to have a stock market crash, I don't feel like I've taken on unnecessary levels of risk. Absolutely, I have risk. I have stocks, right? But I don't think I have crazy levels of risk that if we were to end ourselves up in a stock market crash for whatever reason in 22, in any sort of major recession, I think I've kind of played my cards right. And obviously this video is just referencing if we were to have a stock market crash in 22, right? The other thing is, what if we had a stock market boom in 2022? That's a whole other subject. I just wanted to keep this one kind of focused on my thought process late at night here, and kind of, how I'm positioned, how I'm thinking about my positioning, levels of risk I'm willing to take, and those sorts of things. So anyways, guys, hope you enjoyed this little late night video. Much love as always. Don't forget to smash, download download the Hungry Bowl, use it, whether we're in a great market or a bad market. So anyways, much love as always, guys. Peace.